What if everything you believe about money is quietly changing right now? What if the system that has controlled global wealth for decades is slowly losing its power, and something much older, much stronger, is taking its place again? Imagine a world where countries no longer trust paper currencies, where access to your money can be restricted, frozen, or even erased overnight. Now imagine having an asset that no government can print, cancel, or control. That asset is gold. Welcome to Gold_Silver_Scope, where we break down the real truth behind gold, silver, and the global financial system in the simplest way possible. Let's start with a basic but powerful idea. Gold is not just an investment. It is financial security. When times are good, people buy gold. They save it, store it, and hold it as a long-term asset. But when times turn bad, when uncertainty hits, when currencies weaken, gold becomes something even more important. It becomes usable money. It becomes survival liquidity. You can sell it when you need cash. You can rely on it when everything else starts to fail. This is exactly how gold has worked for hundreds, even thousands of years. It is not a new concept. It is not a trend. It is a proven system. Civilizations have risen and fallen. Currencies have come and gone, but gold has remained constant. That consistency is what makes it powerful. Now think about this for a moment. Governments and central banks understand this better than anyone. When crises happen, when economic pressure builds, they don't panic in the same way individuals do. Why? Because they hold gold. That gold becomes their backup plan. It becomes their safety net. In moments of stress, the thinking is simple. At least we have gold. That single asset can provide stability when everything else feels uncertain. Another key point that many people ignore is liquidity. Gold is not some locked asset that you can't use. It is one of the most liquid assets in the world. It can be sold almost anywhere at any time. This makes it extremely valuable during financial stress. When currencies face restrictions or lose value, gold continues to function. Now let's take this idea one step further. Why is gold so important at the global level? Why do countries still hold massive reserves of gold in their vaults? The answer is simple: trust. Gold does not depend on any government. It does not depend on any promise. It does not rely on policy decisions. It simply exists as value. This is very different from currencies. Paper money, or fiat currency, only has value because governments say it does. It is backed by trust, not by something physical. And that trust can be broken. History has shown this many times. There was a time when the global financial system was directly linked to gold. After World War II, the world entered a system where currencies were connected to the US dollar, and the dollar itself was backed by gold. This created stability. Countries trusted the system because they knew that the dollar could be converted into gold. In simple words, the dollar was as good as gold. This system worked because it had a solid foundation. Gold gave the system discipline. It limited how much money could be created. It forced governments to stay responsible. But everything changed when that connection was broken. Once the link between gold and the dollar was removed, the system became purely based on fiat currency. This allowed governments to print more money, increase spending, and expand debt without the same restrictions. For a while, this worked. Economies grew, markets expanded, and people felt wealthier. But over time, cracks started to appear. Inflation began to rise. Debt levels increased. The value of money slowly declined. And now, we are seeing the long-term consequences of that shift. The system that once relied on gold for stability is now struggling under its own weight. This brings us to a very important question. If the current system is weakening, what comes next? What replaces it? Will another currency take the lead, or will the world return to something more stable? The answer is already starting to appear. Quietly, slowly, but clearly, the world is moving back toward gold. And this is just the beginning of a much bigger shift that most people still don't fully understand. Now here's where things start to get even more interesting. The shift toward gold is not just a theory or a prediction. It is already happening, quietly, behind the scenes, at the highest levels of the global financial system. Central banks around the world are making a clear move. They are reducing their reliance on foreign currencies and increasing their gold reserves. Why would they do that? The answer comes down to control, security, and independence. When a country holds another nation's currency, it is indirectly depending on that country's policies, decisions, and stability. That creates risk. If relationships change or conflicts arise, access to those assets can be restricted or even completely cut off. We have already seen situations where countries were unable to use their foreign reserves because they were held in another nation's system. But gold is different. When a country holds gold within its own borders, it has full control over that asset. No external authority can freeze it, cancel it, or manipulate it. It does not depend on trust in another government. This is what makes gold a neutral reserve asset. It belongs entirely to the owner, without any counterparty risk. This concept of no counterparty risk is extremely important. Most financial assets today are someone else's liability. For example, government bonds are promises. They depend on the government's ability and willingness to pay. If that trust weakens, the value of those assets can fall. But gold is not a promise. It is not someone else's obligation. It is a real, physical store of value. This is exactly why central banks are buying more gold. They are not replacing the dollar with another currency like the euro, the yen, or any other fiat system. Instead, they are moving towards something that does not depend on any single country. Gold offers a level of neutrality that no currency can match. No nation has the power to print it, control its supply, or use it as a political tool. Now think about the bigger picture. If more countries continue this trend, the global financial system begins to change. Instead of relying on one dominant currency, the system starts to shift toward assets that are universally trusted. Gold naturally becomes the center of that system. There is also growing discussion about new types of currencies, including digital currencies. But even in these conversations, one idea keeps coming back: backing those currencies with gold. The reason is simple. Without a solid foundation, any new currency would face the same trust issues as current fiat systems. Gold provides that foundation. However, there is one important question here. If a currency claims to be backed by gold, can people truly trust that the gold is there? And will the issuer maintain that relationship over time? This is where credibility becomes critical. A gold-backed system only works if there is transparency and discipline. Still, the direction is clear. The world is not looking for another fiat solution. It is looking for something more stable, something that has already proven itself over time. Now let's connect this to price movement. Gold's rise is not random. It reflects deeper changes in the global system. When gold moves higher, it often signals declining confidence in currencies and increasing demand for stability. Over the past few years, gold has seen strong upward movement, and this is not just because of short-term factors. It is driven by long-term structural changes. Central banks buying gold, rising global uncertainty, increasing debt levels, and weakening trust in fiat currencies are all pushing gold higher. These are not temporary trends. They are part of a larger shift that is still unfolding. And this trend is likely to continue, because the fundamental reason behind it has not changed. Gold works. It has always worked. It provides stability in a world where uncertainty is increasing. It offers independence in a system where reliance on others is becoming more risky. The more the global system faces pressure, the stronger the case for gold becomes. And what we are witnessing right now may not just be a phase. It could be the early stages of a complete transformation of the financial system. Now let's go deeper into the real problem behind all of this: the modern financial system itself. Today's global economy is built on debt. Governments borrow money, then borrow even more to pay back previous debt. This creates a cycle that becomes harder to control over time. When interest rates rise, the cost of that debt also rises. That means governments need even more money just to keep the system running. This is where the pressure begins. Higher interest rates don't just affect governments. They affect banks, businesses, and even everyday people. Loans become more expensive. Mortgages become harder to afford. Spending slows down. And when spending slows down, economic growth starts to weaken. At the same time, governments face another problem. To support the economy, they often increase spending. But more spending usually means more borrowing. And more borrowing adds even more pressure to the system. This creates what many analysts call a debt trap. It's a situation where there is no easy way out. If interest rates stay high, the system struggles under the weight of debt. If rates are lowered, it can lead to inflation and currency weakness. Either way, the balance becomes very difficult to maintain. Now let's bring in another major factor: global uncertainty. Conflicts, geopolitical tensions, and trade disruptions are adding even more stress to the system. These events push up the cost of essential goods like energy and food. As prices rise, inflation increases. And when inflation rises, central banks are forced to take action, often by raising interest rates again. So now the system is under pressure from multiple directions at the same time. Rising debt, rising rates, rising inflation, and global instability. And this is exactly where gold starts to stand out. Unlike currencies or bonds, gold is not affected in the same way by these pressures. It does not depend on interest rates to maintain its value. It does not rely on economic growth. It simply reflects the level of trust in the system. When trust goes down, gold tends to go up. Now let's look at another important area that many people don't think about, the role of institutions like insurance companies and banks. These institutions are deeply connected to the bond market. They hold large amounts of government bonds as part of their portfolios. But when interest rates rise, bond prices fall. This creates losses on those holdings. If those losses become large enough, it can create serious problems. Insurance companies rely on stability. They need predictable returns to cover future claims. But if their investments lose value, their ability to provide coverage becomes weaker. That can lead to higher costs for businesses and individuals, or in some cases, reduced availability of insurance. And when insurance becomes expensive or unavailable, it affects the entire economy. Businesses may delay projects. Trade may slow down. Costs increase across the board. And in the end, the consumer pays the price. This shows how deeply connected everything is. Now let's shift to another key area, the housing market. For many people, their home is their biggest asset. It represents their wealth, their savings, and their financial security. But what happens when property prices start to fall? At first, it might seem like a good thing. Lower prices should make homes more affordable, right? But the reality is more complicated. If interest rates are high, even lower prices may not make homes affordable. Monthly payments can still be too expensive, so new buyers struggle to enter the market. At the same time, existing homeowners face a different problem. If property values drop significantly, they lose equity. Their sense of wealth starts to disappear. This can reduce spending, increase financial stress, and weaken the overall economy. This creates a dangerous situation. On one side, homes are still unaffordable for buyers. On the other side, falling prices hurt existing owners. There is no easy solution. Governments often try to manage this by supporting asset prices. They want to prevent sharp declines because it affects confidence. But keeping prices artificially high can create even bigger problems in the long run. It delays the correction instead of solving the issue. And this brings us back to a key idea. Much of today's wealth is based on perception. It depends on market prices, government policies, and financial conditions. It is not always backed by something solid or tangible. Gold is different. Gold does not depend on market sentiment in the same way. It does not rely on low interest rates or government support. Its value comes from its physical nature, its scarcity, and its long history as money. That is why, during times of uncertainty, investors and even nations start to move toward gold. Because in a system full of pressure, complexity, and risk, simplicity becomes powerful. And gold represents that simplicity. As these economic pressures continue to build, more people are starting to question the system itself. They are beginning to look for something more stable, something more reliable. And once again, gold is at the center of that conversation. Now let's step back and look at the bigger picture, because what's happening right now is not just an economic cycle. It looks more like a system-level shift. For decades, the global financial system has been driven by one main idea: expansion. More money, more credit, more spending. This created growth, but it also created imbalance. Debt kept rising, currencies kept losing value slowly, and governments kept pushing the limits further. For a long time, this worked because people believed in the system. But today, that belief is starting to weaken. You can see it in multiple areas at once. Inflation is no longer a temporary issue. Debt levels are reaching extreme highs. Interest rates are becoming harder to control. And global tensions are increasing uncertainty. All of these signals point toward one thing: the system is under stress. And when a system is under stress, people and institutions start looking for alternatives. Now here's the important part. Many alternatives have been discussed. Some people talk about digital currencies. Others talk about replacing one global currency with another. But when you look closely, none of these options fully solve the core problem. Why? Because most of them are still based on trust in a central authority. Whether it's a traditional currency or a digital one, the issue remains the same. Someone controls it. Someone can change the rules. Someone can increase supply. And that brings us back to the same risks we are already facing. This is why gold continues to stand apart. Gold does not need a central authority. It does not rely on policy decisions. It cannot be created out of nothing. Its supply is limited, and that limitation is what gives it long-term strength. Now think about how powerful that is in today's environment. When currencies can be expanded at any time, when debt can keep growing, and when policies can shift quickly, having an asset that remains stable and independent becomes extremely valuable. This is exactly why gold has maintained its role for centuries. It is not just about price. It is about trust, and trust is becoming one of the most important factors in today's financial world. Now let's talk about another key idea: neutrality. Gold is neutral. It does not belong to any country. It does not give power to any government. It is accepted globally without political conditions. This makes it unique in a world where financial systems are often influenced by geopolitical interests. Countries are starting to realize this more clearly. They want independence. They want control over their own reserves. They do not want to rely too heavily on another nation's currency or system, and gold gives them that independence. This is why we are seeing a steady shift. Not loud, not dramatic, but consistent. Central banks are increasing gold reserves. Nations are exploring ways to reduce dependence on foreign currencies. And discussions about future monetary systems often include gold in some form. It may not be a full return to a traditional gold standard, but it could be a hybrid system. A system where currencies are, in some way, linked to gold to restore trust and discipline. Because at the end of the day, the biggest problem right now is not just inflation or debt. It is credibility. When people lose confidence in money, the entire system becomes unstable. And rebuilding that confidence is not easy. It requires something solid, something proven, something that people trust across generations. Gold fits that role better than anything else. Now, let's address a common debate. Some people believe that newer assets or technologies will replace gold. They argue that the future will be completely digital. But even in a digital world, the question of value remains. What gives a digital asset its worth? If it is not backed by something real, then it still depends on trust. And if trust weakens, the value can become unstable. This is why even in advanced financial discussions, gold keeps coming back into the picture. Not because it is old, but because it works. And when systems face uncertainty, people don't look for experiments. They look for reliability. That's exactly what gold represents. Now here's the key takeaway from all of this. We are not just seeing random economic problems. We are seeing the early signs of a transition. A shift from a system based purely on fiat currency towards something more balanced, more disciplined, and possibly anchored by real assets like gold. This transition will not happen overnight. It will take time. It will move in phases. And there will be volatility along the way. But the direction is becoming clearer. And those who understand this shift early are the ones who can position themselves better for the future. Because in times of major change, understanding is the biggest advantage. And right now, understanding gold may be more important than ever. Now the biggest question is, what does all of this mean for you? Because at the end of the day, this is not just about governments, central banks, or global systems. This is about your money, your future, and your financial security. The changes happening right now may seem slow on the surface, but their impact can be very powerful over time. We are moving into a period where uncertainty is becoming normal. Inflation, rising costs, economic pressure, and market instability are no longer rare events. They are becoming part of the system itself. And in this kind of environment, relying only on traditional financial structures can be risky. This is where awareness becomes important. Understanding how money works, understanding how systems change, and understanding where real value lies, these things can make a big difference. Because when systems shift, those who are prepared are in a much stronger position than those who are not. Now think about everything we discussed. Gold has survived every major financial shift in history. It has remained valuable across different systems, different countries, and different time periods. It does not depend on promises. It does not depend on policies. It simply holds value. That is why, during times of uncertainty, gold always comes back into focus. It is not about fear. It is about preparation. It is about having something that stands strong when other things become unstable. It is about balance. No system is perfect, and no asset is perfect. But having a part of your wealth in something that has proven itself over centuries can provide a level of confidence that is hard to ignore. At the same time, it's important to stay realistic. Markets move in cycles. Prices go up and down. Gold is not a tool for quick profit. It is a long-term asset. Its real strength shows over time, especially during periods of economic stress. That's when its true value becomes clear. We are entering a phase where more people, more institutions, and more countries are starting to recognize this again. The shift may not be obvious every day, but it is happening, slowly, quietly, and steadily. And as this shift continues, gold is likely to play a bigger role in the global financial system. Whether through direct ownership, reserve holdings, or future monetary structures, its importance is increasing once again. So the real takeaway is simple. Pay attention, stay informed, and start thinking beyond the traditional view of money. Because the world of finance is changing, and understanding that change early can give you a powerful edge. If you want to stay ahead, if you want simple and clear insights about gold and silver, and if you want to understand what's really happening behind the scenes, then make sure you stay connected with goldsilver_scope. This is where we break down complex ideas into simple truths that actually help you. And remember, the goal is not just to follow trends, but to understand them.